Hey traders, Nick Shaheen here, looking at XLE. Not so much to talk about itself, although there's a lot of information in here about the trading of it, but about how changing time frames on a chart gives you completely different perspective. What you thought you knew, if you don't zoom in or zoom out, you will be missing on a whole bunch of information. So I never make trades without looking at things from many different perspectives, time-wise. Okay, on to XLE. So this is an ETF for basically energy sector. My take on the energy, I think we as in everybody, fed a lie to chase oil up to 80 just so they can offload their profits. I think that I can't prove it. I'm not from Wall Street. I'm telling you, like, I'm the average jack on the street. Houses like Goldman Sachs, they have trading desks, they have news desks, and whatever clients they run money for. I don't think there's a wall like they used to. Like, what the trading desk does, the news desk knows about, and therein lies the conflict. So magically, Goldman Sachs comes out with a note a long time ago about oil going to 80, defies logic, and oil goes to 80 and then starts failing. So I shorted and I won. So I was short CVX, which relates to this one. That's kind of my disclosure by putting the jab to Wall Street a little bit. I was short CVX, actually Chevron, several times, and all of them won. I took heat in one of them, but then they worked out like clockwork. I currently shorted the USO on the pops, and those played out. I've closed a lot of them. I still have a few stragglers, but they're just house money. The way I short things is by selling a call spread or buying a put spread or puts, and I have a combination of all three on these two tickers. Now, on to the XLE. Why do I mention CVX? The Chevron and Exxon are about 44%. Last time I checked, they were about 44% of the whole XLE. So if you don't talk about these two, you're missing about half the chunk. So they matter. Now, this is a 1 hour chart. It looks like, oh my gosh, it's fallen into support. Let's go. Well, maybe not. Let's go to a daily chart. All right, so I'll just change it to 1 day. Boom. Now the perspective changes completely. I could have done smaller increments, but this is good enough. So I don't want to spend too much time on it. They should have held this. They didn't. So now therein lies a neckline that is lost, and they're below it. Okay, so today they were off the lows, but it was still a bad day. It was a bad day for the market. So today, what is it? 7-8. It was a bad day in the market, but they still have all the support. So the bulls could still save it. They're still inside the channel, kind of. It's an ascending channel. This red-blue is merely a mathematical representation of the regression. So if you want to say reverting to the mean, it should go back up to here. I challenge that, and if it does, I will short it again even bigger than last time. So I think that they will find sellers as they bump up. So the message is, for this particular ticker, don't buy the pop, in my opinion, because the machines will now sell it to the suckers that continue to try to follow the message that has been tooted in the media so long. Now, what about zooming, right? Am I done? No, hell no. Watch this. Okay, so what's this white arrow here? I was like, all right, I put that there for a reason. Ooh, now we're looking at something different. Look at where they failed. What are we talking about? So back in 2018, remember the crash of 2018 before the Fed flipped the on switch for all stocks by saying, oh, we were kidding, raising rates. We're going to cut rates and infuse 1.4 trillion a year. So that's what rallied all stocks, but not oil, which is fine. So energy stocks did not go there. In fact, they collapsed and made new lows. They just came back and failed at that same level. I think it will take them a long time to get above there, if ever. Why do I say that? Because this is a new world. What happened after COVID? A whole bunch of things changed forever. So we drive less, we fly less, we commute less, because now telecommuting is actually a thing. Yep. So we do more meetings on Zoom, and it's totally acceptable. Nobody's gonna, look at you funny because you don't want to fly to go meet them for 5 minutes at the airport. So we're using less oil. Moreover, the whole world, every major car maker on the planet said they will ditch fossil fuels forever. And we need more oil? I don't get it. We have more oil than ever. We can pump more oil than ever. Just a matter of turning on the spigots. The higher oil prices go, the more spigots get turned on. Supply will flood. OPEC disbanding, if they do disband, they'll be opening the floodgate to pump. It'll cost them like $10 to pump. So they will win that war of price cuts. There is no way price should be rallying more than the pandemic started. Absolutely no logical explanation to it. I don't care what expert says what. If Boone Pickens comes back from the dead and tells me that, I wouldn't believe him. All right, so am I done? No. Check this out. All right, so this is a monthly chart. You've heard of Head and Shoulders, right? This is kind of like a perfect Head and Shoulders. Huge. I'm not a technician, but I do play one on TV from now on, once in a while. So what is a Head and Shoulder? It's just a name. Meanwhile, it was a base for a massive rally. Remember peak oil? A base for another big rally, not even close. And then a base that couldn't hold and fell apart. This is their coming back into trying to take the base. If this was a regular stock and this was a daily time chart, I would short this stock on the pops, at least on the first few times. So my opinion is the stock markets are at all-time highs with the biggest tailwind ever. Oil is just getting back to this ledge that they lost in from the pandemic, arguably here. And now they're starting to get ready when the whole market is going to lose the biggest tailwind ever. The Fed, that's fact, that's not my opinion. The Fed, their next move is not going to be dovish. Whatever they do next to change, it's going to be hawkish. They're either going to taper or cut buying the monthly. They buy 120 billion a month. Now they already did that, but don't tell anybody. Again, I'm not an expert, but I educated myself on reverse repos. Sounds to me like it's a pawn shop in reverse, and people came in and said, here's our money, let's buy our shit back. And so now they took assets and they got rid of their cash. So the Fed essentially already tightened, but don't call it a QT. Remember QE, not QE? This is a QT, not QT. Again, I'm not a Wall Street guy. Do your own homework. The bottom line is the gravy train is ending and these guys are starting to get started. No, I say XLE has had its good days and now it's got more challenges than. So how about this? I say it. Downside potential outweighs the upside potential in my opinion. So if you force me, I would short it again. Point of the video again is to zoom out or change time frames. So if you're too close looking at 1 hour charts, go to a daily, go to a weekly. Don't be shy to go to a monthly. I've gone to 3 months on several occasions this week on different charts. I can't remember which ones they are. Oh, I can tell you which one it is. This one, EWG. That's why I shorted it. Finally, it's paying. So 2008 debacle, 2018 debacle, this one. Debacle? Question mark. I don't know. If they take this out and run, I would change my mind. Nick signing out. By the way, disclosure, nothing here was a recommendation to buy, short, get long, anything. This is me expressing my opinion on charts and how changing time frames can do you good.